Hi guys, welcome back to another lovely trading video. Going to be going through how to use EMAs while using standard deviation. Don't have standard deviation on this chart just to make everything more clear, but it's the exact same as this chart, which is 1 day 1 minute. And yeah, with standard deviation, taking it off just so everything is a bit more clean and easier to see, and all you can then see is the EMAs. So firstly, I've got the resistance plots on CLVS, which was one of the biggest runners on Friday. Got it on the second deviation on the 4 hour, and also I'll change this one to the daily. And then we also got the first deviation, on the second deviation on the daily as well. So you can use these EMAs in several ways as sell points, buy points, kind of however. So the first one I would be looking at is using it as an extension. So as you can see, the 9 EMA, or we're using SMA, but you can use either EMA or SMA, doesn't matter. Obviously, the stock moves away from it, like in this case, it's 7% away from, actually, well, let's move it to exactly where it was. Yeah, so at this point it was 4% away from the, or roughly 4% away from the 9 SMA. What this basically means is it will need to retrace. So most likely we're going to get a pullback. Usually I would be looking to short it around the 3% mark. Usually it doesn't like staying out of that kind of distance for too long. But obviously every candle does go up, the SMA will move with it, so you don't want to obviously go with full size or use it alone, because it could carry on going and you just have to keep averaging or take a big loss. So that's the first way you can do it, using it as a extension. The further away it is from the 9 EMA, the more likely it is to come down, but the problem is it also shows that it's got a stronger momentum, so you do have to be careful for that, and just use it alongside something else. So for example here, where we were running into the deviation, we were 3% extended, so that was added confidence to short, and I would have been happy to short at that point. Second way to use it is as sell points. So we can actually get rid of it, this one now. So we've shorted here. Let's say we didn't do any adding, which we probably wouldn't have on this trade. We can then use this 20 EMA as a cover point. So either the whole position, half the position, or whatever you want, but you can use this as a sell indicator to get out some of your position, maybe even some on the 9 EMA as well. That would have locked you in about a 10% profit, and then coming down to the 20 EMA, that would have locked you in about a 40% profit. So maybe sell half your size here and the other half here. And again with the 50, again you can use it as a sell point, and the 200, be unlikely to hold down to the 200, but you can use it as an indicator to sell. So they're the two main ways you'll use it on at least the strategy I've put on the channel so far. However, one more way I am looking to start using it, and I am still doing my research on it. I'm going to start trading it live starting Monday, and I'll update you in a few weeks just so you know how accurate and how well it works. But it's using the 20 EMA as a short point. So once we come into these high momentum plays and we hit into our deviation, I'm going to start looking for this pullback and wait for the close below the 20, which we got here. Wait for it to hit kind of a low and then do a pullback. So here we got our low and a pullback and a close, a tap into the 20 and a close above the 20, and then a new fade down. So I'll be looking to short coming in at a break of the lowest close, which was here. So I'll be looking to short these stocks coming into this point, and then having a stop at the highest point of the pullback, which was here. So my risk on this kind of trade would be 47 cents, and I would be looking to make a different amount. So you see it wasn't even a 1-to-1 on this, but from what I've seen the accuracy is quite high, so I won't be looking for 1-for-1. I'll probably be looking to sell some at half the percent and then move your stop to break even, and then maybe some at 75%, some at 100, and when I'm saying percentage I mean compared to the 1-to-1 ratio. And so yeah, I would probably have a few sell points, the first one being around this mark here, and another one would have been around here, but we didn't actually hit down to this mark, to make it the 1-for-1. So again, sell some of this position here and then maybe have a break-even stop, so we would have made some profit but then stopped out here. However, I will be doing, as I said, trading this live. I haven't done enough research to kind of recommend this kind of trading, but it's something you can look out for yourself as well when you're trading. But yeah, I'll update you in like a month or so when I've tried this out for a good amount of time. I have tested it back tested it on all my trades this year, but I want to trade it live as well because obviously your emotions play different when trading live. So yeah, that's it. The main thing you're looking for is extensions and using it as a cover point. So I hope that's all clear. If not, leave any comments and I'll be happy to answer any of them.